Hello there, and welcome to the latest episode of Mondays with Matthew. I'm Windermere Real Estate's Chief Economist, Matthew Gardner. Today we're going to focus on last Thursday's data release for US existing home sales activity in October. So let's get straight to the numbers. Well, if anyone out there was still thinking that the market was set to slow, I'm sorry, you're going to have to wait a little longer. Existing home sales rose for the fifth consecutive month to an annual rate of 6.85 million units. That's up by 4.3% month over month, and sales were 26.6% higher than we saw a year ago. And it's not just the annual rate that rose. Monthly sales came in at 573,000. That's the highest monthly figure since the market snapped back in July following the initial COVID-19 shutdown. And with sales rising, so did prices. The median price in October was measured at $313,000. That's up by a massive 15.5% from a year ago. We haven't seen that pace of price growth since, 2006. And it was also the 104th straight month of year-over-year price gains. And we're seeing these significant increases in prices not just because mortgage rates are low, although that certainly isn't hurting. And the bigger reason is that there's far more demand than there is supply. Now, if you think back to your college economics classes, what happens to prices when you have limited supply but net new demand? That's right, prices rise. And as you can see here, there were fewer than 1.4 million homes for sale in October. Now, I would add, I seasonally adjust my numbers and the National Association of Realtors doesn't. But even if you use their figures, well, they came in at just over 1.4 million homes for sale. So it's really not that much better. And with tight supply and net new demand, well, there was only 2.7 months of inventory at the current sales pace. That is another all-time low. You see, a balanced market, depending on where in the country you are, is somewhere between 4 and 6 months. So we are certainly a long way from balance. Now I'll give you a different way to see how competitive the market is. There were an average of almost 3.5 offers for every deal that was written last month. I'd also add that 7 out of 10 homes sold within 4 weeks of coming online. Median market time, 21 days. For perspective, it was 36 days a year ago. Regionally, sales rose the fastest in the small northeast region, but all areas saw sales up by over 20% year over year. And when we look at sale prices, again, very significant increases across the board. Now, I would note that the northeast, well, that market saw the greatest price increases for single-family homes, up 21.7%. Condo prices, well, they rose the most in the southern states. Prices were up by 13.9% year over year. Well, that's the big picture. But you know me, I do love to dig into the dark corners of these data releases. And when I did, I found some pretty interesting nuggets of information there too. I mentioned single-family and multifamily price growth a moment ago. And when we break out the data, well, the supply numbers were very interesting. Here's the year-over-year change in available inventory. It's not surprising to see the number of single-family homes for sale way down. But look at condos. Inventory is higher now than it was a year ago. Now, I certainly think it's way too early to suggest that this is wholly due to COVID-19 and families flocking away from our urban centres, but I will be watching to see if this is an anomaly or if it's the start of a trend. Now, my first reason for not being overly concerned about the condo market right now is this. Sales are still rising, up by 5.8% versus September, up by 25.9% year over year. And that is even in the face of increasing inventory. Single-family sales, they were up by just a little more, 26.7% year over year. But interestingly, the month-over-month pace of single-family sales actually came in lower than condos, 4.1% higher month over month. Finally, condo prices. They are still trending higher, even though we certainly saw them turn negative at the outset of COVID-19, but up by 10.3% year over year, to a median price of $273,600. Now, that's not quite the pace of price growth that we saw in the single-family world. Median sale price is up by 16% to $317,700, but really wasn't that bad at all. So there you have it. I think you'll agree these were pretty impressive numbers across the board. Certainly no sign of a slowdown yet, but as I suggested earlier, I will be watching the multifamily market to see if inventory levels continue to rise. And you see, if they do, we might start to see home price growth start to taper, even though single family prices, they are likely to continue to rise. But again, I must reinforce my view that this pace of price growth, both single family and multifamily, it's absolutely not sustainable. Now, of course, there's very favourable mortgage rates in place right now. In fact, the average 30-year fixed rate hit another all-time record low last week, 2.72%. But that said, I believe that we are rather close to the lows that we're going to see in this cycle. But we're just not there yet. Housing, it continues to outperform. And some other things which I found of interest as well. First-time buyers still out in force. In fact, 32% of all sales went to first-time buyers. Demand for second homes. And this was interesting. It's kind of counterintuitive. A lot of people thought that would slow down dramatically because of COVID. It hasn't. Still solid demand. In fact, second home sales were roughly 14% of total sales in the month. So no visible signs of COVID-19 stress there either. The bottom line is this: something has to give. Now, I'm not saying that prices will retreat. Rather, I think that the pace of price growth has to slow, even though we have got very significant demand. And the reason why I say that is it's likely because one of two things will happen, or it might actually be a combination of both. Either we will hit an affordability ceiling. Now, just by the very nature of it, that will slow down price increases. Or we'll see additional supply coming online. And the additional supply, again, will do nothing more than to temper price growth. But I think it's going to really have to come from new construction. I really think it's highly unlikely we'll see a significant increase in the number of resale homes coming online. But I do see builders stepping up, and I see them developing more homes as we go forward into 2021. Builders are getting bullish. And we know this because the National Association of Home Builders, they released their housing market index a few weeks ago, and the index hit another all-time high. And I think that this optimism coming from builders today, even though lending is certainly tougher and it's harder for them to borrow money, even with that headwind, I still think we'll see single-family starts hold above 1 million units per year. And I think it's actually going to rise even more than that in 2022. And that's ultimately going to be a very big relief to a lot of home buyers out there who are just getting very troubled and frustrated by the lack of inventory in the market today. But you know what? I'm actually getting ahead of myself. You see, in 2 weeks' time, I'll be sharing my 2021 US housing market forecast with all of you. So I really don't want to give too much away, at least not right now. The housing market, it is performing, COVID-19 or no COVID-19. And I think this will continue as we close out the year, even though we are seeing some states slowing down their economies in the face of rising coronavirus infections. Well, that's what I think about the housing market, from very solid numbers. And I hope you found what I had to say of interest. As always, if you've got any questions about my comments today, I would love to hear from you. But in the meantime, take care out there. And I hope you'll join me again in 2 weeks when I will be revealing my US housing forecast for 2021. Bye now.